Good afternoon. This is Craig Moddelmog with Cornerstone Wealth Management, and this is the third uncut and unedited Wall Street X's and O's. I'd like to welcome everybody today. To get things started, for those of you who are receiving this via an email from me, if you can look below, which I sent you, there's a disclosure. We are getting very compliant here, which we've always been. We're just getting more formalized and more compliant. For those of you watching this on YouTube, what this disclosure says is that basically my comments and my thoughts are mine, that this is not instructions to do something or not do something, and if you should do something or not do something, it is not my fault. Case in point, I had to buy a new lawnmower last week, and on the side of the lawnmower is a picture depicting that if you were to stick your foot under the lawnmower while it's going, it would cut your foot off. No kidding. Sadly, that's the world we live in disclosure. So in all seriousness, like I said, it's something that we have to do from a fiduciary standpoint, and obviously we want to play by the rules and do what is right. So anyway, thank you all for joining. To kick things off here today, at this point in time, the fundamentals of the markets are still showing a very low possibility of a recession here in the United States for the remainder of 2019, and unless anything changes significantly into 2020. Trade tensions do pose a big risk, though, or will continue to propose a big risk to both stocks and bonds, which is something we're going to be talking about a lot here moving forwards, as we always have, but it's going to continue to be really in my bullseye. Over the weekend, the attack on the Saudi Arabia oil facilities disrupted literally 5% of the global supply in oil. What's happening today? Oil prices are up. Brent here in the U.S., light sweet crude is up almost 14%, and Brent, which is the international oil futures contracts, are up 14% as well. So huge impact on oil as we speak. Also this week, the Federal Reserve is expected to meet and announce another rate cut. Is it 25 basis points or 1/4%? Is it 50 basis points or 0.5%? Pick one, right? I think it's probably going to be 1/4%. Don't hold me to that. Again, disclosures, not my fault. But anyway, that's kind of what I'm thinking of, 1/4 point rate cut for this week. From a global snapshot, here's some interesting statistics. U.S. large caps year to date are plus 21.7. For 12 months, they are only plus 5.7. Small caps are up 18.2 year to date. For 12 months, down 6.6. The developed world is up 14.8% year to date. For the last 12 months, up 3. Emerging markets are up 8.8 year to date. For the last 12 months, only up 3.9. On the bond side of the ledger, U.S. Treasuries year to date are up 6.1%. For the last 12 months, up 8.4%. Investment grade bonds in the U.S. are up 11.1 year to date. For the last 12 months, 10.8. High yields up 11.5 year to date. For the last 12 months, plus 6.8. What does this mean? What it means is for the last 12 months, and for you bond lovers, and there is one of you out there that I am thinking of specifically, you know who you are, bonds are outperforming stocks for the last 12 months. Very interesting. You think, well, shoot fire, we're up 21%, Craig, year to date. Yes, it shows the volatile environment that we've been in the last 12 months. We've had several sell-offs. We have also set new highs, but we're really not exceeding these highs by much. So as time goes, it's going to be becoming more and more important as we set a new high, or if we do, are we able to really regain any momentum? Which this is going to be really interesting to watch. On that point, when I look at inflows and outflows, what I mean, monies that are going into the stock market or going out of the stock market. Year to date, okay, equities have seen 275 billion, with the B, people, 275 billion of outflows. That means people pulling money out of the stock market. Where's it going? Well, we've seen $193.7 billion go into bonds or fixed income. We've seen $402 billion go into money markets. So what we're seeing is about a 2-to-1 ratio of dollars coming out of equities going into bonds and fixed income, which is always a very interesting perspective in the midst of a stock market that for year to date is up plus 20%. Very interesting. Very, very interesting. Keep your eyes peeled on the news this week. I will continue to stay in touch. And again, this is Craig Moddelmog, Wall Street X's and O's with Cornerstone Wealth Management, and I am out. Happy Monday.